KOSPI surges 6.24%. A CPI rally reaches the whole market. All right, let's just dive right into this explainer, guys. We are looking at a massive, completely market-defining shift today. There is no time for a slow build-up here because the data we're breaking down is literally moving markets as we speak. We're going to unpack exactly how a single macro data point out of the US ignited a multi-trillion won chain reaction across the entire Korean stock exchange. Just look at the sheer scale of this momentum. It's an absolute sea of green representing a staggering 6.24% jump, pushing the KOSPI index to close at 7,284.41. But what you really need to take away from this isn't just that final number. It's the unbelievable breadth of the rally. We saw a stark shift with 711 stocks advancing, which completely overwhelmed the mere 169 decliners. This wasn't just, a handful of tech giants pulling the index up. This was a rising tide lifting almost every single boat in the harbor. But to understand why everything surged, we need to trace it all back to the spark. Part 1. US CPI ignites the spark. Inflation relief. So what was the crucial data point here? The US June Core Consumer Price Index eased to 2.6% year over year, coming in noticeably below the 2.8% forecast. Now, you might be wondering, why does a tiny fraction of a percent in US inflation matter so much to the KOSPI? Well, it's all about what it did to interest rate expectations. Traders instantly priced out near-term Federal Reserve rate hikes, dropping the implied odds of a July hike from roughly 42% all the way down to just 16%. When expected interest rates drop, the discount rate applied to future earnings drops right along with it. This instantly boosts the present-day value of growth stocks, especially semiconductor companies, since their massive earnings are weighted much further out in the future. Part 2. The ADR rotation strategy, cross-border arbitrage. Now, a macro spark like that, it needs fuel. And in this case, that fuel was a very specific cross-border arbitrage opportunity involving SK Hynix's recent record-breaking NASDAQ listing. Just days ago, Barclays initiated coverage on SK Hynix's newly listed U.S. American Depository Receipts, or ADRs, with a massive $330 price target. The market reaction was violent. The U.S. ADR surged 27.29% in a single session to close at $193.92, and that created a massive arbitrage gap. Suddenly, the US-listed version of SK Hynix became significantly more expensive than the one-converted value of its underlying shares listed in Seoul. And smart money? They are always hunting for these kinds of pricing inefficiencies. Let's take a quick step back and ground these financial moves in actual reality. These are the physical high-bandwidth memory chips, HBM3E from both Samsung and SK Hynix. This is the hardware. This is the absolute bedrock of the intense, multi-year AI demand cycle that Barclays and other analysts are betting heavy on. The global chip shortage is fully expected to persist through 2027, and these exact components are why investors worldwide are so desperate to get exposure, whether that's through New York or through Seoul. All right, so how did this arbitrage gap actually play out in terms of real capital? Well, when an ADR trades at a premium, investors immediately rush to buy the cheaper local shares to profit from the difference. This valuation gap pulled a staggering 2.33 trillion Korean won in total foreign net buying right into the Seoul market. And look at how heavily concentrated this was. 666.7 billion won flowed directly into SK Hynix, making up over 28% of the day's entire foreign buy. Another 510.5 billion went straight to Samsung Electronics. Institutional investors were just ruthlessly executing a strategy to close the valuation gap on these specific electronic giants. And the result of this highly targeted capital influx is exactly what you'd expect. While SK Hynix jumped an incredible 8.83%, Samsung Electronics rose 6.27% right alongside it. This was not retail sentiment. This was structural, heavyweight foreign capital forcibly re-rating the biggest companies in the market to match their offshore valuations. Part 3. Program buying lifts everything. The domino effect. But how on earth does a concentrated buy-in in just 2 semiconductor stocks snowball into a massive 711 stock market-wide rally? To answer that, we have to look at local market mechanics. Let's build this step by step. Early in the morning, KOSPI 200 futures surged over 6%. moving way faster than the actual cash market. This pushed the average futures basis up to 11.78 points, which is a huge 7.46 points above its theoretical level. Because those futures were so expensive, investors who wanted index exposure basically skipped the futures market entirely and just bought the underlying stocks directly using cash. This triggered a monumental 1.82 trillion won in direct, non-arbitrage program buying. The buying pressure was so rapid, so severe, that it actually triggered the buy-side sidecar, a market circuit breaker that halts program execution for 5 whole minutes just to let the system catch its breath.
The real key to understanding this market-wide surge is just remembering how program orders actually work. They don't just pick 1 or 2 stocks, they buy entire baskets of equities all at once. So, because of that initial semiconductor surge, massive automated orders were triggered that just swept up the rest of the market. The momentum reached far beyond tech, prompting sidecar halts not just on the main KOSPI board, but on the tech-heavy KOSDAQ index as well. It was literally a mechanical liquidity flood.
Part 4. Semiconductor equipment amplifies gains, the supply chain.
Now, as the broader index was being lifted by these algorithms, a secondary narrative was playing out deeper down in the semiconductor supply chain, violently amplifying the index gains. The supply chain data points we got are just incredible. Domestically, Hanmi Semiconductor, a vital player in HBM packaging, absolutely crushed Q2 earnings estimates and immediately soared 29.88%, hitting its daily limit up. Meanwhile, halfway across the world, the global lithography giant ASML reported $9.3 billion in Q2 revenue and actually raised its full-year guidance. ASML's raised outlook was a massive confirmation signal that global capital spending on chipmaking is accelerating. And since Korean equipment makers like Jusung Engineering and Wanig IPS depend directly on that exact same global capital expenditure, their stocks surged 8.77% and 12.27% respectively. The offshore signals perfectly validated all the onshore buying.
Part 5. Hidden risks, shorts and retail sellers.
But as any seasoned market observer knows, you've got to look beneath the surface. You've got to look at the contrarian signals buried beneath today's overwhelming green heat map. Notice the sheer contrast in behavior here. While foreign institutions were essentially panic buying 2.33 trillion won worth of shares, retail individual investors were dumping almost the exact same amount, net selling 2.47 trillion won. And the vast majority of this retail selling was concentrated right in SK Hynix and Samsung Electronics. So what we're seeing here is domestic retail investors taking profits directly into this giant foreign liquidity rally.
But the plot really thickens when we look at the trading volume dynamics over consecutive days. Look at this pattern. Foreign buying in SK Hynix actually slowed down on July 15th compared to the heavy buying we saw on the 14th. Yet SK Square, a major holding company tied to SK Hynix, surged a breathtaking 16.13%. When price action completely detaches from net buying volume like this, that's a massive hint we're looking at a short squeeze. Short sellers who were betting against the stock were suddenly forced to buy back shares at higher and higher prices just to cover their painful losses, which forcefully amplified that upward surge.
And that actually leads us to our final and honestly, maybe the most crucial data point of this whole explainer. 3.45%. Despite this historic multi-trillion won rally, the KOSPI's market-wide short-selling ratio didn't drop. Actually, scratch that, it spiked, hitting 3.45% of total trading value. That equates to 2.24 trillion won in active bets against the market, a very significant increase from the day prior. So this leaves us with one critical question to wrap up on. Is this rising 3.45% short ratio just laying the groundwork for an even more violent, looming short squeeze as these sellers get trapped? Or is this the smart money quietly building a massive bet on an impending market reversal? We'll be watching the data closely to find out. If you would like to receive news on the closing of Asian stock markets before the New York stock market opens, please subscribe.